Kyle Bray again here. I'm just recording a quick little webinar, or not webinar, but video, just explaining my Instagram entries, what I did, what I look for. If you guys follow me on Instagram, you already have a pretty clear idea of where my entries were, why I took it, because I give pretty somewhat detailed explanations why. All right, so first of all, everyone knows, when I'm trading, I'm basing everything around higher time frame, right? So there's a little bit of a trick with these higher time frames, and they move by various 4-hour time frames and daily time frames, right? So usually part of my trading plan in the morning is wake up 5:30, trade the 6 a.m. push. So 6 a.m. push would have looked like this, but I didn't trade this morning. I didn't trade the 6 a.m. I was busy doing other things. So I said that other part of my trading plan is 10 o'clock. It's when the new 4-hour candle opens. So of course, first thing I do, I assess the market. I draw my real support and resistance zones, and I started trading a little bit before the new 4-hour candle. So I know there's a new 4-hour candle. The currency meter was starting to get a little stronger for the Japanese yen. The US dollar had a little more strength, and Japanese yen was not quite so strong, but it was starting to gain some momentum. Japanese yen was increasing. So my entries are literally here. My entries are all literally here. Check it out on my Instagram. You can see my entries. And when I'm trading off of support and resistance, following higher time frame momentum, so I know the 4-hour candle is about to open. I know there's about to be a push because we've been consolidating for 4 hours. So for 4 hours, we've been bouncing support and resistance, right? So finally, an hour before, here's 9 o'clock. We go up, we hit the resistance again, and we reject pretty strong off our resistance, right? You can see our pretty strong rejection here. Not so many pips, but it's the size of the candle is that I'm looking at, right? So about a 6-pip candle. And what we've got is, as soon as I see this rejection, the currency meter was going in favor of the Japanese yen. So of course, if you're looking at it like a scale, the Japanese yen is stronger, so we're going down, right? The US dollar was much weaker. As you can see, US dollar is real weak, Japanese yen is real strong. So I'm just following the momentum, right? So you can never really anticipate how far down a drop is, but when you're looking at the higher time frames, like the hour, for example, let's look at the hour time frame. Let's see what happened. So based off our hour time frame, we got my entries. We had another rejection of a zone, right? It ends up closing looking like this little hammer looking thing. Usually that means we're just going to go straight in that direction. We've got a rejection. Price closes like this, just kind of following the momentum of the new hour candle, right? But as you can see, with the 4-hour time frame, this is what was really intriguing, was the 4-hour, because if we're going down, right, what happened? We had a higher high. If I'm looking for 2-1 confirm, right, this is actually a lower high and a higher low, but for 2-1 confirm, this becomes the new highest high. This is lower low, this is the lower high. To just continue momentum, right? New 4-hour candle. Here's the 10. New 4 o'clock candle, or 4-hour candle, excuse me. So price makes a lower high. It just keeps coming up. It rejects again off of the resistance, and you just continue to follow into the momentum. Using our currency strength meter really helps you, because if a higher time frame is telling us we're going bearish, and the US dollar is so weak, and the Japanese yen has more strength, then you just keep it simple and just follow the momentum, right? So moving forward, all my entry cells were taken here a little bit before 10 o'clock. Of course, going into the 10 o'clock phase, we come down. We've got another wick to fill. What does price do? Fulfills the wick. Now we've broken the support, right? We've already broken support. This here is our support zone. and we broke our support here. Look at where this 15-minute candle closes, right? We broke support, and then we come up and we do a 2-1 confirm on the 15-minute time frame. So we have higher highs, lower low, and lower high. This is 2-1 confirm, right? Right? To continue going into the bearish momentum. We have incoming cross. Cross hadn't happened yet, but we have a break of structure, just one 15-minute consolidation, and then just continue into the momentum. If you're looking at the 5-minute time frame, right, we had multiple. Right, we break support, we make a pullback. This is our lower high. So we continue momentum. We broke support again, we make another lower high, continue momentum. Make another lower high, continue momentum. You can see that when price is in momentum, we're going to make lower lows and lower highs if it's bearish. It's going to make higher highs and higher lows if we're bullish, right? So it's very simple. Very simple when you're looking at the higher time frame, especially if you are trading just based around like from 10 to 11. So if I didn't trade all in the whole 10 to 11 and I just started trading at 11, it's not like you don't lose any opportunities, right? Like look, 15 pips in what? Not even 30 minutes. No drawdown. So we've already broken the major support here, right? This is just off the hour time frame. We've broken the support on the 1 hour. So where do you think we're going? Well, obviously we're going down to the next support. Now that support becomes resistance. So what does it do? We're just going from zone to zone, right? If we look at these 4-hour time frames, if we break this, if we really break this, where do you think we're going? Pop up the daily. Just zoom out. If we're really breaking that, I mean, look where we're going. We're going down here. Looks like we're already here, a little bit in this area. If we break this zone, the next zone that we're going to is right here, right? Almost another 80 to 100 pips away if we're really going to continue down into this bearish momentum. This is just by purely following higher time frames, just going from support and resistance zone, zone to zone, zone to zone. And if you're trading around specific times, like I'm trading around very specific times, 4-hour time frames, hour time frames, our profit targets are coming fairly quickly. If you want to see from my entry point, like 40 pips, having some still running, I mean, my profit target is 10 pips a position. But then when you have potential swings, you just run your stop loss and profit, set your stop, your take profits, whatever. You know, when you're trading around these optimal times, this is how you're going to be the most successful in your forex trading careers. Is understanding how the higher time frame works, and then just trusting the process. You just got to trust the process. Many people can't catch 10 pips a day consistently. Well, here you see you had so many times since 9:30 in the morning. It's 11:30, so for 2 hours, you had there was no time that you didn't have time to get into the market, just by understanding the higher time frame. Right? Even if we got in just after we have pure confirm at 10 o'clock, we still got 15 pips to drop. Because the next zone that it's going to, you look left, there's nothing real strong here. It could have gone to here, too, into this area. And if it was going to break this area, it's going straight down to this area. And what did it do? It fulfilled that. So this is just by following higher time frames, based off currency meter, etc. Right? Lower low, lower high. Price might now we might have now that we've hit this pretty nice support zone, we might see an EMA magnet or retracement, but we have so much distance in between these EMAs. I see price probably it's potentially can come back up to this range here, make another lower high, continue down bearish. We might just start consolidating for a little bit. We've got the Asian market opens in a few hours, so the big moves happen. We get in, we get out, right? We have no drawdown. If you get in right at 10 o'clock, right? Like, look, here's 9:45 by 10 o'clock. Like, right when the candle opens, it drops immediately 5 pips. And then within 30 minutes, it drops our 10 pips. So within two 15-minute candles, all of our profit target range is done. But we see potential swing. We see potential higher time frame momentum. So we continue into momentum. So I hope this helped you guys. I don't want to go too much into detail. Don't want to confuse you too much, but this is just another understanding of what I look for. So when we've got too much consolidation, right, just zone to zone, like there's plenty of opportunities. Like if you're trading around this time, we've got the same thing. Like we have 2-1, we have another 2-1 confirm here, like higher high, lower low, and it comes down a wick to fill, but it closes like this, lower high, right? So there's still potentials to get in if you're going to be hyper scalping or scalping, but there was no clear momentum, right? Like look, that's 15 pips, that's huge, and that's in what, two 15-minute candles, so in 30 minutes. So it's not like there's not potential throughout these days, even in consolidation, that you can't make money. But when it comes to understanding, like, okay, well, we've been consolidating for 4 hours, so chances are by the time the new 4-hour candle is going to open, we're going to have confirmed direction. And if even you just want to wait for confirm, by 10:15 we broke structure and we made our first lower high. So by 10:45, or you should be entering in at least by in the 10:30 range in that 15-minute candle, and then just put your stop loss, take profit, right? So if we enter right here, just right here, you're looking at potential stop loss to be well, it's pretty clear momentum, but I would say up around this area, up on these nearest areas, right? But I didn't put any stop loss today. I just stacked up all my orders here. I put absolutely no stop losses in. I put too many orders, and I just trusted the process. So that's just personal. I recommend always having stop loss, like putting, if sales are here, stop losses up here, beyond this wick range. That's where stop losses would have been, right around here, around 10 pips or so. But then, of course, what do you have? Risk to reward ratio. You risk 10 pips for 41 pips each. It's a big risk to reward following your trading plans. But anyways, guys, once you understand how these higher time frames move, just jump in. Notice how the market moves. 2-1 confirms, 2-2s, lower highs, higher lows, depending on trend. I'm a stronger sell trader than a buy trader. Just I can spot sales better than buys. But just moving forward, work on your trading plans and get to understand those higher time frames better. So I'm gonna go ahead and close shop.